Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon and that has an effect on the global markets. In the month of October, the Bank of Japan is holding two major meetings. At its earlier meeting this month, the bank failed to take any actions and the central bank director seemed to implicate that the bank would not be injecting any additional stimulus. The Bank of Japan Governor Haruhiko Kuroda has spoken in relative upbeat terms on the economic and inflation outlook, including his reiteration last week that disinflationary energy trends are likely to be transitory. There are a few signs that the second quarter slowdown is starting to turn around, with the latest household survey report showing consumer spending picking up over the summer, while wage growth is also making modest improvements. Economic data was released from Japan has unfortunately been disappointing. These economic data points indicate that economic activity in Japan is slowing down, and most importantly, the trade activities declined sharply in Q3. Exports have dropped significantly, and likewise industrial activities and trade balance. This is very bad for the Japanese economy, especially as it points to lower growth. The Bank of Japan is expected to cut its growth and inflation outlook for this fiscal year at a rate review this week, but only slightly tweak its projections for next year. Sources said possibly tempering expectations that the central bank will soon ease monetary policy further. But not straying far from its current projections for next year, the BOJ can maintain that it's still broadly on course to meet its inflation goal of 2% next year without needing to step up its massive asset purchase program, people with direct knowledge of the matter said. Critics say the program has been only marginally effective and distorts the bond market, but the BOJ board itself has not been reservedly behind it. Finance Minister Taro Aso also expressed doubt on Friday that further monetary stimulus would help achieve the inflationary target. European Central Bank President Mario Draghi said the ECB's quantitative easing program would continue beyond next September if needed. Traders are now betting the ECB's action may force the Bank of Japan to boost its quantitative easing program as well, likely after next week's October 30th meeting. The final BOJ forecasts, which represent the median of the board members' projections, could be worse if some members offer bleaker assessments than expected now. Kuroda said he sees no immediate needs to ease further, stressing that a tightening job market will lead to wage gains and boost consumption, helping Japan generate modest inflation. Not all board members share Kuroda's optimism, with pessimists fretting that the global slowdown may drag on Japan's growth longer than expected. Some also worry about the strength of consumption.